Welcome to Value Vest Daily. We have got some absolutely massive news today that is sending shockwaves through the entire electric vehicle world. The Chinese EV maker NIO just did something a lot of people thought was still years, maybe even a decade away. They reported their first ever quarterly profit. And you better believe the market noticed. The reaction was just immediate and, well, explosive. NIO stock absolutely surged, jumping over 14% on the news. Now, this isn't just some small bump. This is a huge vote of confidence from investors.
But this gets us to the real heart of the matter, the big question we're going to tackle in today's deep dive. Is this the real deal? A sustainable turning point for NIO and maybe the whole EV sector? Or is it just a temporary bright spot? A blip in the shadow of these escalating global trade wars?
So to figure that out, here's how we're going to break it all down. First, we'll look at just how historic this profit milestone really is. Then we're going to deconstruct the Q4 numbers to see what's really going on under the hood. After that, we'll zoom out and ask if this is a turning point for the industry, navigate those tricky trade headwinds, and finally, we'll pull it all together into an investment thesis to help you think about that big question: is NIO a buy?
Okay, but before we dive in, the usual but very important disclaimer: this is all for educational and informational purposes. It's not financial advice, it's not tax advice. Please always do your own research and talk to a professional.
All right, let's get into it. Part 1, NIO's historic profit milestone. To really get how big of a deal this is, you have to understand where NIO came from. Since day one, the company has been all about aggressive growth, building these beautiful cars with really innovative tech, but also burning through billions and billions of dollars in losses.
And this timeline really puts it all into perspective, doesn't it? Founded way back in 2014, NIO has spent more than a decade just pouring cash into building its brand, its tech, its factories. So this Q4 2025 profit, it's not just another number on a spreadsheet. It's the finish line of a 10-year marathon. It marks this huge shift from a cash-burning startup to, maybe, a truly sustainable automaker. Okay, let's move on to part 2, deconstructing the Q4 numbers. Because as you know, the real story is always in the data. So let's cut through the hype, look at the hard facts, and see what's actually powering this incredible turnaround. And this table, wow, it pretty much tells you everything you need to know. Just look at those year-over-year changes. Revenue is up an incredible 76% to nearly $5 billion. Deliveries, they shot up 72%. But the real showstopper, the line that has everyone talking, is net profit. I mean, look at this. A complete turnaround from a $1 billion loss to a $40 million profit. And to top it off, their cash reserves are looking really healthy, up 57% to a solid $6.6 billion.
And this visual just drives the point home. The contrast is just stark. A year ago, NIO lost $1 billion in a single quarter. This quarter, they're in the green. This isn't just dipping a toe into profitability. This is a monumental leap from a deep, dark red into the black. So, the big question is, how on earth did they do it? Well, a massive part of the answer is right here, an 18.1% vehicle margin. This metric is absolutely crucial. It means for every car NIO sells, they're making way more money than they were before. It's not just about selling more cars, it's about selling them more profitably. And that is the absolute key to long-term survival. And this beautiful margin expansion, it's a textbook example of achieving economies of scale. For years, NIO poured money into its own high-tech factories. Now, with production volumes soaring, the cost of running those factories is spread out over way more cars, which pushes the cost per car down. Plus, they now have the clout to get better deals from suppliers for things like batteries and chips. So this profitability isn't some overnight miracle. It's the strategy they laid out years ago, finally bearing fruit. And the good news doesn't stop there. The company seems to think this momentum is going to keep rolling. Their guidance for the next quarter, Q1 2026, is incredibly strong. They're projecting delivery growth of nearly 100% and revenue growth that could even top 100% year over year. And that $6.6 billion in cash, that gives them a huge cushion to handle whatever the market throws at them. All right, let's zoom out for part 3. Is this a real turning point for the whole EV industry? See, NIO's success doesn't happen in a bubble. It's already sending ripples all across the global auto world. And this is the crucial point. NIO's profit could be a bellwether.
For years, the mantra in the EV space was growth at all costs. Burn cash, grab market share, figure out profits later. NIO's achievement signals that the industry is maturing. It's proof that a path to sustainable, profitable operations is actually possible, even for a premium brand in this ridiculously competitive market. And this comparison really highlights how different NIO is. On one side, you have the rest of the market, which is just caught in these brutal price wars. Think BYD, you have Tesla's market share in China shrinking, you have all these worries about making too many cars. But on the other side, you've got NIO's premium strategy, focusing on things like their NIO houses, that game-changing battery swapping tech, and building intense brand loyalty. This profit suggests their way of doing things might just work. And we absolutely cannot forget the power of their home turf. In 2025, EV penetration in China hit an unbelievable 40%. This is one of the most advanced EV markets on the planet, and it provides this massive supportive customer base for homegrown champions like NIO to build a really strong foundation before they even think about expanding globally.
You know, success like this could have a really powerful ripple effect. It's a huge confidence boost for NIO's peers, companies like XPEV and Li Auto. It sends a signal to other premium EV makers that, hey, profit is possible. And it could lead to what they call a re-rating, where investors start to see the whole Chinese EV sector as more valuable.
But, and there's always a but, isn't there? Now we have to talk about the big, dark cloud hanging over all this good news. Part 4. Navigating global trade headwinds. Because it doesn't matter how great your company is, nobody is immune to geopolitics.
And the biggest challenge is right here, a 27.5% tariff on Chinese cars coming into the United States. This is a massive wall. For now, it basically locks NIO and other Chinese EV makers completely out of the very lucrative U.S. market.
And a policy like this creates this incredibly complex domino effect. So first, the U.S. slaps on the tariff. But Chinese exporters don't just throw their hands up. No, they pivot. They redirect all those cars to other markets, Europe, Latin America, and suddenly those markets are flooded with new competition. This also messes up global supply chains, making things like batteries more expensive for everyone, and it always raises that looming threat of China hitting back with its own tariffs. And the data shows this pivot is already happening, and it is huge. In just the first 2 months of 2026, even with the U.S. tariffs, China's total exports jumped 22%. But get this, their auto exports skyrocketed by a mind-boggling 67%. They are finding new homes for their products, and they're doing it fast. So here's the bottom line. While that Q4 profit is fantastic, some major headwinds are still out there. Remember, for the full year 2025, NIO still lost over $2 billion. So this profitability is brand new, it's fragile. The risk of overcapacity sparking price wars in China is real. Global EV sales growth is actually slowing down a bit, and of course, those U.S. China tensions could undo all this progress in a heartbeat. And that brings us to the grand finale, Part 5, the investment thesis. After crunching the numbers, looking at the strategy, and facing the risks, how should an investor think about NIO stock right now? Let's weigh the bull and bear cases. The bull case, the argument for being optimistic, is pretty compelling. I mean, they've finally proven they can be profitable. They've built this incredibly powerful premium brand with an almost fanatically loyal customer base. They are the undisputed leader in that innovative battery swapping tech. Their guidance for the future is super strong, and they have a balance sheet that's like a fortress with $6.6 billion in cash. But you have to consider the bear case, the argument for being cautious. One good quarter doesn't guarantee a trend. It's still fragile. The competition from players like BYD and all the global giants is absolutely relentless. The geopolitical risks from trade wars are real and totally unpredictable, and a bigger slowdown in EV sales could hit their growth, no matter how good their cars are. So to wrap this all up, our takeaway is this. NIO's first profit is a genuine milestone. There's no doubt about it. It shows they're resilient, and it proves their premium model can work, even with all this trade uncertainty. For investors who have a higher tolerance for risk and are making a long-term bet on China's EV ecosystem, NIO looks like a really compelling, if volatile, opportunity. Which leaves us with the final million-dollar question for you to chew on. Is this the start of a massive, historic run for NIO, making it a generational buying opportunity? Or is this just a head fake, a little bit of good news in a brutally tough industry that could end up being a classic value trap? The evidence really does point in both directions, and the answer will probably come down to how those global headwinds play out.
And that's our deep dive on NIO. If you found this analysis valuable, please subscribe, like, and share Value Vest Daily for daily learning opportunities before you put your money to work. And one more thing, we really want to hear from you. Drop a comment below if you want us to deep dive into any specific high-risk, high-reward opportunities. Thanks for tuning in, and we'll see you in the next one.